All right, everyone. This is my first video that I'm recording as it pertains to the trades that I'm taking on a daily basis. I said to myself that I was going to do live trading, but because I have a day job, it's kind of difficult to record my screen and do a video all while going into a trade and working my day job. So what I'm going to do is just replay the trade that I took and why I took it, and then also show you the proof. Although I will say I don't need to show any proof to anyone. If you are a trader that needs proof of someone's account, then please click out of here, because I really don't have time for that nonsense. I've already said in my first video that I believe that paper trading and prop firms are the best way for a newer person to learn versus risking their own capital. Although someone could argue when you buy prop firm challenges, you are risking capital. That's true. But the cost of a prop firm challenge is minimal in comparison to someone who's depositing, $1,000, $5,000 into a brokerage account. I think that prop firms have their place, and the way I do my trading is, I always test and back test my strategies, and then I start doing forward testing. And I'm now at a point where I've come up with a strategy that not many people have talked about. I'm going to talk about it here. You can believe me. You can do your own back testing. In fact, I probably discourage you to do anything that I say, because I am not a profitable trader yet. So why take my advice, right? But just a disclaimer, I'm not a financial advisor, and this is just for entertainment purposes, educational purposes as well. So when I take on these trades, I've developed a system. I only trade ES and NQ futures. I don't get into Forex. I'm not into that stuff. I may trade gold every now and then, but not as much. But I have two strategies that I really, actually three, that I'll talk about. Today, I'm just going to strictly talk about my first strategy, and then other videos in the future, I'll talk about the other two. But you're probably asking, okay, what's in front of my screen? And this is an NQ chart here, and I don't have indicators. The only thing I have on my screen and on my indicators tab is just a couple things, real brief here. Let me delete this one, because this one I didn't put there on purpose. So I just have, watermark. I have, text there, and I have it in front of me just to always remember, the why. And then the second thing I have is the EMA, the exponential moving average. I have the 50, the 100, and the 200. So the 50 is in green, the 100 is in blue, and the 200 is in red. Now these three moving averages, I keep them on there because this helps me develop a bias for the day. And this just only helps me to see where the market is moving, right? So I'm currently on a 15-minute time frame. That's usually where I trade out of, usually for a couple of strategies. And then I normally drop down to the 5-minute for the strategy that I'm going to show you today. This inverted fair value gap indicator here, I just have it just to point out fair value gaps without having to draw blocks and things of that nature. But you don't have to put that on there. I also, for this particular strategy, I work out of the 8:30 open. And this little indicator here on the right, the ICT midnight and 8:30 open, it just gives me a visual of the midnight open and the 8:30. So I'm going to show you real quickly what I do every morning before I take on a trade. I usually log on to TradingView around almost 8 o'clock every morning. I see where things are at. So I'll give you an example. I'm just going to use the replay button here on what I do. So normally I'm going to make it a little bit bigger here. And this just kind of gives you a visual representation. So I look at where my bias is. I look at, see, okay, the 50 is above the 100, the 100 is above the 200. This kind of tells me that the market is going to be going up today. And you're probably saying, well, you know, it's kind of downtrending, but you know, these exponential moving averages, although nothing is perfect, no indicator is perfect, I will tell you that, but this really gives a good, clear, concise, reliable indication of where the market is moving. So I'm going to show you real quickly what I do. So again, I do what I call the 8:30 midnight strategy. And that's basically, it's real simple. It's very mechanical. I don't have to think too much about it. I do a 1-to-1 risk reward ratio. Sometimes I do a less than 1-to-1. Sometimes I do a 0.5-to-1 risk reward ratio. The only reason why I do that is because with this particular strategy, you really have to monitor, for the most, not for the most part, you know, there's going to be some days where you'll have to kind of monitor this. A day like today where I see very clearly that it is, there's a clear direction in the market. I probably won't monitor it too much, but on a day like, for example, this was, you know, like usually, like I'll give you an example. So usually when you see, you know, kind of this area here where you see the moving averages kind of like are tight with each other. That's where you kind of have to monitor this. Again, this is just an illustration of what I'm trying to describe here. So I'm going to exit out of here. So let's go back here. So right now we're at 8:10. So I'm going to push this forward to 8:30. And I'm going to show you what I do in just a moment. 8:30 and 8:30 right there. Perfect. So as we can see here, this 8:30 here, that's from yesterday. So once the new 8:30 is formed, then this, you will no longer see it there, but because we're on replay, that's why it's showing up there. But this is the current midnight open right here. So this is what this strategy consists of. You may have heard it before, may not, you know, it just depends. But basically what I do is I have a couple of strategies that will tell me whether I'm going to buy or sell here. So to buy, basically what the strategy will have to tell me is, so when 8:30, when the 8:30 price is above the midnight, that for me is a buy. So 8:30 open, and when it closes, if that closing price is above the midnight, then I take it as a buy. Okay. Now, if the 8:30 closes below the open and above the midnight open, then it's also a buy. Okay. So that's another indicator for me to buy. Okay. So, and then there's another when so if midnight is above 8:30, oops, above 8:30, and it closes above the open, I'm also taking that as a buy. Okay. When will I sell? So let's talk about sell. So selling is kind of the opposite of this, right? So if midnight is above 8:30, and it closes below the open, if the 8:30, and that's really the only way I would sell. Also, if this doesn't happen too often, but sometimes the midnight and the 8:30 are like right there, neck and neck. They're kind of equal. So if midnight and 8:30 are really close to each other, this would also give me a sell indication. So with these rules in place, let's look at the trade that I took this morning. So as we can see here, the 8:30 is above the 8:30 open is above the midnight. I'm sorry. Yep, the 8:30 opens above the midnight, and it closed below the 8:30 open. So this gives me the indication that it's a buying opportunity. So I'm just going to go ahead and hit the buy button. And then when I usually hit the buy button, it's like right there at a couple seconds right before the next candle opens, which is at 8:35. So like at, 4 seconds, 3 seconds prior to the end of that candle closing, I hit the buy button at a market buy. And then I usually go 1-to-1. So I want to make 400, and I'm risking 400. Now, someone may ask and say, well, why are you risking so much? It's not going to let me do it. This is raw unfiltered, guys. So I'm just going to go ahead and put this. So someone may ask, well, why are you risking 400? Wow, if a prop firm, has daily drawdowns of 1200, daily max, 2500 for the evaluation. Someone may say, well, why are you risking so much? Do this smaller at a time. And you could. It's just for me, and I'm working on this, and maybe I'll change in the future, but you risk what you want. Everyone's risk parameters are going to be different. And right now for this strategy, this is what works for me. And so what I do is, after I buy, I place my take profit and stop loss, and then I just let it ride, and we see that within a matter of minutes, it hit take profit, right? And just to give you some proof, right? This is the trade I took today. This is my Tradeify account. It is a demo account with them, or I'm on a evaluation right now with them. And I took it, as you can see here, I took it at around 8:34 with like 2 seconds left. And then I got out of the position when it hit take profit at 8:42, made 400. Just to show you real quickly, because I didn't make a video yesterday neither, but I'll show you a recap of what my journal looks like. I'll show you here. So on Tuesday, I did do the same strategy. As you can see here, I risked 400, but because it was a little bit, the exponential moving averages were kind of close together, I decided to simply take that trade and close it out there. So technically it did work. I just got out of it before it took my 400 take profit. I also did other trades that day on the 15th, and that brought my account to negative. I made negative 1,300 that day. That was a bonehead. These were bonehead decisions that I made. And again, I'm paying for it. But I'm slowly, but surely learning from my mistakes. And, again, one of the biggest mistakes is that I tend to make is FOMO. And so fear of missing out is big. And that's why many traders are not successful. But the ones that are successful are the ones that push through it and they keep going. Yesterday's trade, I posted this, one of the first posts I put on X, but I also put it on YouTube as a post instead of a video. I made 800. I risked 2 contracts on NQ. And today I just risked 1 contract. So that is this strategy in a nutshell. Now, many people say, well, just let your runners run. And that's true. And that's why I have other strategies in place to take advantage of that. But ideally, what you want to do is, and this is kind of a strategy that I learned from other influencers in this space, but you want to have or try to have at least, I don't know why I'm doing this with a pen. I should just type this out. But my goal is, and again, you guys are coming on this journey with me. My goal is to have at least 5 accounts with prop firms. 5 accounts with prop firms. All right. So that first, I want to copy trade 3 accounts. So copy trading 3 accounts. And then having 1 account for, I guess, for riskier trades, not necessarily riskier, more of letting them run, right? And that would be for moving my stop loss. So I would eventually, move my stop loss. So if, like, for example, say I was in a position like this, I would, as you can see, this kept going up and up. Let me just exit out of here. So this kept going up, right? So if I was doing another strategy with one other prop account, I would let this run and just move my stop loss. So if I were to, let's go back to the 830 as an example. So if I were to buy there and, I took my profit at the 800 there, but what I would really do is start moving my stop loss. So I would move it right below that candle there and then keep on going, right? That's those are other strategies that some other people do. Like I'll do like the bottom of the candle of the open. Same thing with that one. I would continue to go up, right? And I would probably have done a couple contracts to do this. But again, moving up there, right? And there you go. I got taken out. But the point is that would be one strategy in which I would use my stop loss, and move it up as I go on further in profit. But the strategy that I just showed you, the 8:30 midnight, I have a mechanical take profit stop loss, and I just let that go. Other strategies where I will make another video on will be momentum strategy, and I'll show you how I do that one. That one doesn't come around too often, but when it does, I do. I've had really good days taking those trades. And the other one is the famous orb. The orb strategy has always been a good strategy. All the strategies are really good, guys. I mean, I think that every strategy has its good and its bad. It's all about you, right? You are the X factor here. And as you can see from my previous days, on Monday, I took these trades and I shouldn't have had to take these trades. I don't know why I went on these trades. I got FOMO and all these other feelings. And it's like, sometimes I get tired of having those feelings. And that's why I'm kind of fed up. There comes to a point where you just, you've had enough and you just do what you need to do. So that's what I'm going to do. I'm going to just do what I need to do and stop screwing around. And I hope that this content will kind of help you see that anyone can do this. I have a full-time job and I take these trades on, I let it go, and I go back and I see, okay, I took profit or I stop lost, and next day you move on. but it's much better to do that than to, you know, keep fooling around and over leverage yourself. I know some people may not agree with my method of, you know, 1-to-1 or, you know, doing one NQ versus maybe doing micros, and everything has its place. There is going to be future videos on how I'm going to manage once I get all those 5 funded accounts, and then keep adding funded accounts waiting on the pipeline so that if one gets blown, you automatically get put back in, you know, you're in the game. But I'll make another video for that. So guys, that was the video for today. And subscribe. And I'm going to be soon putting out affiliate links with some prop firms that I am going to be affiliate with. So look, I really wish I didn't have to do that, but hey, it's a way to supplement this channel, and you guys will support this channel, hopefully, and that way I can make more content. Hopefully one day not having to work full time and make this my go-to. So yeah, look out for those things and subscribe. Appreciate you guys.